This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description.
I just posted a client post for you. I just got it loaded into Slack, so have a look at your earliest convenience. We go over a little review here of the fragile upside that I wrote about Monday morning pre-market. It's Wednesday morning pre-market, and I said this was about to change. We do have a floor, but they are buying protection. I talked about the fragile upside, et cetera, and specifically semi-exhaustion. All right, so Tuesday we had the stress signs or the cracks. Nothing major, but it definitely was a market moving event as it related to high beta momentum trades. They were down 7.5% on Tuesday on the back of reports that OpenAI is not hitting sales targets. One of the worst days for this pair in 5 years. So it was a kind of a well-timed market is exhausted call, but basically this is not something I see as a big deal because we have digestion here that can range a good 200 points in the S&P. Semis coming under some distribution because of profit taking. And if you take a look at Seagate and Western Digital this morning, you'll see they're up another 10%. So the memory and storage stocks continue to surge. Anyway, I wrote this up just to kind of review. We definitely had semiconductors pummeled on Tuesday. In addition to the OpenAI news, the U.S. ordered numerous chip companies to halt shipments to 2 facilities in China, and that really put a dent into the semiconductor equipment and materials space. Again, still no big drama, but we do have today the big earnings, and then Apple tomorrow. We're going to get some more volatility in both directions. VIX, as maybe you noticed, dropped yesterday below 18 as SPX was red. That's what Jason refers to as an under-VIXing scenario. And in that particular case, I can also say that the channel that they keep pinging, in other words, they're selling puts at 7,000, they're selling calls at 7,200. This is a channel of support, but they are also buying late May and June protection of size as insurance. So that's where pretty much the market trade right now. Some theta decay in the short term, protection for June in the intermediate term. Anyway, Mag 4 tonight, hyperscalers likely beat, by the way, and the Fed likely does not cut. And we know it's Powell's last stint as a Fed chair before Warsh comes in, but we don't know for sure if Powell wants to stay on as governor. So that could create a little bit of drama. This will also create some drama. It's an irony. Dealer option positioning presents a bit of a conundrum. Dealers enter short as index moves higher 2 to 4%. It doesn't happen very often, but when it does, it's impressive. So that sets up some kinetic and for more fragility in the upside bet. And that's why I also highlight the CTAs, even though they might be satiated in their long book. It is also with vols compressing, that's volatility compressing. They could add another 40 billion. However, if markets start to fall, they have a lot more to sell. So we're not there yet, but I want to just put that as, hey, it's still a fragile upside. Semi-reflexivity, I talk about this. Earnings have crushed it, but we tend to overshoot in sentiment. And now it's the herd. Now it's very much investors have become the herd, chasing momentum in semis, memory, all things data center, which emboldens those not in the herd to think it's safe to chase up here. So that's another fragile upside because last in typically equals first out. So keep that in mind. SOX index up 50% in a month is also at 60 times price earnings. That is euphoric. That's price to perfection. Only time it's been higher or that we could make it go higher, I should say, is the melt up a la 2000. So anyway, we definitely have reflexivity. Very tough for investors that don't want to chase this, waiting for the top to roll over. But I warn, there's still a stealth buyer in the room, vol control funds. And I talk about how last week they weren't very active, but as realized volatility falls, this is what they can start to look like. So I took this picture. You can see the timestamp on the 27th, and I've been watching this episode going, are they going to enter? Are they going to enter? And then yesterday I said, I see them coming in because realized volatility is dropping. Anyway, you could see the tier 1 data. You can see some other notable sizes if you're very, very quant-like. But for simplicity's sake, here's how it works. As volatility comes down, vol control funds will be buyers. So you've got Jason also coming in talking about this dynamic, and I want to just have you highlight here that he sees a possible pop to 72.50, 7,300 over the next couple of weeks. But with everything else, especially Powell leaving Marsh more hawkish than most people give him credit, there is basically a June OPEX that is creating some cascading vol event potential if and when 7,000 is busted. Anyway, long story short, that is why I write about flows. I know some are more technical traders, some are macro traders, some are fundamental traders, some are really quant traders. I try to combine it all with sentiment and with my intermarket. With that said, here's a client post that will really thrill those who are interested anyway in learning more about flows over fundamentals. But I also remind that tonight, it's about fundamentals. We've got 4 earnings reports coming in, and that is definitely hyperscaler build out of size. Are they going to continue with this outsized CAPEX performance? That's what we're definitely going to be waiting on tonight. I will remind, I have no edge with earnings. It would not surprise me one bit that they are absolutely, these, especially the top 3 cloud customers, they have committed over $1 trillion in future revenue. They're scaling AI CAPEX into all this infrastructure that supports it. I'm talking about Google, Amazon, and Meta. So they should be guiding higher on CAPEX, not lower. They should confirm the AI demand is accelerating, not stabilizing. If they disappoint, these 3 in particular, watch out. Then we get volatility. So this compression that we have right now with VIX will start to expand. And that's also, keep in mind, Apple reports, and they're a big player, but not as much as the 3 that are reporting after hours today.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.